We live. Okay, so we're live. Thank you for allowing me to be on your show. You want to do the introduction?
All right, we are live. My name is Tish Griffin. You're live on my YouTube channel, and I'm here for you today. And just so you know, I specialize in helping people home, um, find the path to home ownership. And so we'll be talking about a lot of financial topics over the next few weeks. And if you guys have some topics that you want to talk about or discuss, feel free to reach out. So I'm here today, and I'm very excited that I get to talk with Kirk Gregory from Country Financial. And just so you know, Tish Griffin, I'm from Guaranteed Rate Mortgage. And so we're here, and I really wanted to get Kirk on just to talk about the importance of life insurance. And there's so many different types of insurance out there. People don't know what the most important is. And life insurance is one that I feel gets overlooked. So I just wanted to bring him on to talk about the importance of having life insurance, especially nowadays with the scare of COVID, with people losing loved ones. And so, Kirk, you just want to give us a little bit of why, what is life insurance actually? Why do people need it?
Life insurance take care of your family, take care of your loved ones, leaves a legacy for your kids. It can help make sure your family are handed down correctly. It does numerous of things. It's all according to your plan. And Letitia was right. Life insurance is it's overlooked all the time. A lot of people think that just because they have life insurance with their job, they're taken care of. They don't understand that if they were to retire or to change job, that life insurance policy doesn't go with them. And they don't also know that really typically big corporations have life insurance policies for their jobs and for their employers, where they can write it off as a tax benefit versus really have benefits for the actual employee. People don't know that. Another thing is people don't understand that they don't have enough life insurance because when they got the life insurance policy, they only think, oh, I only need enough for burial or just enough to bury me and maybe pay off a couple of debt. But they don't understand that who's going to pay the mortgage when they're gone? If you have kids and a wife that doesn't make the income, who's going to pay off that debt that you left for your kids? Nobody really knows that. So what I'm going to do today.
Wait. So life insurance is not for just paying off funeral expenses. Like, can you use more than that? I mean,
it's about paying off your mortgage, about leaving annual income for your kids if they're young, because somebody has to take care of the kids. Even if you have a spouse left behind, he is going to need financial assistance to take the kids to daycare, to pay for the grandmother to take care of them, for schooling. So you're going to need money for that. Education. If you have kids, nieces or nephews, you want them to have the opportunity to either go to college, a trade school, or to university, or they can use that money to open up their own businesses. So it can do numerous of things, but it depends on what you want to leave behind. And it's unfortunate that a lot of people have this bad mindset where they don't want to leave nothing or almost not enough behind. But if you're a person that wants to make sure you leave enough, make sure to reach out to me.
Well, how do I leave enough? What do you mean about leaving enough? Like, what do I need? Like $10,000? Like, how do I know when it's enough? Or do I just say, hey, I want to leave behind $1 million? What's the difference?
That's a good question. So typically what I do, I can't speak for other insurance companies. I like to do a thorough analysis, just like Tish would do a thorough analysis if you're in the process of buying a home. And what I do, I just ask 4 or 5 questions. And depending on those questions, you will come up with your life number. Every life number is different according to the person because everybody has a different mindset when it comes to life insurance. People want to leave different things behind.
Okay, well, I'm curious about this whole life number thing. Like, how do we find a life number? Is there a way or?
Oh, yeah, there's definitely a way. So I'm going to use that as an example, and I'm going to ask you 4 questions starting off.
Okay.
It's called the DIME method. The DIME means debt, I means income, M means mortgage, E means education. All 4 of those things are very important. So the first one is, Tish, how much debt do you have currently?
Let's say I have like $15,000 worth of debt.
$15,000. And that debt includes car loans, any personal loans, credit cards.
Just like my student loans in there too. So
student loans as well. Okay. All that is included. Anything except for your mortgage.
Okay.
So now your income. Typically what people do, they do it two different ways. They either multiply their annual income by 5 to 10 years, or if they have kids, they take their youngest child and multiply their age, their years until they reach 18 or 25. It depends on how long something will happen to you that you want that child to be taken care of or have some kind of financial assistance. Now, for you, would you like? I know you have kids. Would you like to multiply your income by 5 to 10 years, or would you like to multiply how many years it takes for either one of your child to reach 18 to 25?
Let's do that. Yeah, so
25. So how old is your youngest child again?
let's go with, okay, let's say I want like maybe 12 years before
12
they reach
years.
18. Yeah.
Okay, so 12 years. And then what's your annual income?
I think an average income, let's say about 80,000.
80,000. Okay, not bad. And then your mortgage. How much do you own your mortgage?
Let's go 150.
150. Okay.
Mm-hmm.
And then the last one is education. What kind of college do you like your babies to go to? You want them to go to a 2-year university or 4-year university? You want them to go to a trade school?
I mean, it looks like everything's almost online anyway right now. Let's just go with the typical 4-year university.
Or university. Do you have an estimated value? You think how much it'll cost per year? The average right now is 20,000.
That's what I was thinking, like 2025.
20,000. Okay.
Yeah.
So we go 25,000, just to be on the safe side. And how
Okay.
many kids do you have again?
Huh?
How many kids do you have again?
Let's say 1 or 6. Let's go with 6.
We'll go with 6. Okay.
Yeah.
So that's 25 times 4 times 6. Okay. So, and how much do you currently have in life insurance right now?
So if I only have a $200,000 policy, am I okay?
According to the questions that you answered, probably not. I haven't calculated everything out yet, but I want to know how much you have. So when I add up your number, I can subtract what you already have. So then you'll see the gap.
Okay.
So now let me add everything up. So you have 15,000 worth of debt. And then you want to multiply your annual income, 80,000 times 12. So that's $960,000 right there. Plus the 15,000. Then you owe 150,000 on your mortgage. And then you want your babies to go to a 4-year university. Your estimate is gonna cost $25,000 per year. 4 times 6.
You make me feel like that 200,000 not gonna go far already.
Oh no, it's not. So your life number is $1.7 million.
Wow. So what does that mean?
The question that you answered, you said what?
What does that mean? I need to leave behind 1.7 million?
According to your plan, that's how much your life is worth, your life number. So I'm gonna subtract 200,000. So you have a $1.5 million gap in life insurance right now, according to the plan.
Wow.
And the plan that you come up with. And a lot of people, once we go through this exercise, like, oh wow, I actually don't have enough coverage, because if they got 200,000, where that 200,000 gonna go to? They're not gonna have enough to go to school. They're not gonna have enough to pay off the mortgage. Their debt, they're gonna have to be responsible for that if they have anything left. So this is an eye opener. They're like, oh wow,
it really is.
You know. So now what I would do is I'll ask them, when do you plan on retiring?
I was going for next year, but probably like 20 years or so.
20 years from now. Okay. How old would you be in 20 years from now? I want to put your age out there, but that's important.
Stay on air.
Okay. Typically, people want to retire by the age of 65. That's typically 65 years of age. And then how much would you like to have in the bank when you retire? A realistic number.
I'd like to have, that 1.5 million that we were just talking about or more.
Okay. 1.5. No, okay. We can go with 1.5. I don't know if we're ready to get there, but we can put that on the paper. The reason why I asked that is because now we get to the actual products. Now, country, we have 2 different products. One is called whole life and one is called term. They do completely 2 different things. Um, whole life is like owning it. After a while, you can pay it off at the age of 65 or 20 or 10 years, whatever plan you decide to have that is paid off. And then once you pay it off, you still have coverage. So that means if you pay it off, if you pass away, you still family will still get money, whatever case may be. It also has a cash accumulating side as well because we invest your money. So you can borrow from this policy, and like I said, we invest your money as well. So it knocks out three birds with one stone. Where term insurance is like renting. Term, you can get a term for 10 years, 15, 20, or 30 years. And typically people get these for like temporary things like a car loan or a mortgage because a mortgage, for instance, people don't plan on paying a mortgage over 30 years, correct? You don't plan on paying your mortgage over 30 years, right? So if something happened to you, you would like that mortgage to be paid off for your family or your spouse, and have to worry about paying the down on the mortgage. And all you have to do is worry about paying utility bills and taxes every year, which is tremendous because with us being real estate, not having to pay a mortgage, you can either rent it out, you can do a lot of things with it. So that's another
The
way of
safety
generating.
of not paying works.
Exactly, exactly. Um, and what country does on the term side, we have a term where if you outlive your term, you get all your money back. So it has a
What?
saving mechanism.
Wait, say
Yeah.
that again.
So we have a term product where if you outlive your term, so if you get a 30-year term and you outlive it, I'll cut your check and get all your money back. Every dime and penny you pay
Wow.
30 years, you get it back. So it's a saving.
Wow.
So you can take that money if you're 65 years of age and you can take a vacation. You can buy another investment property. You can do whatever you want.
So you're not throwing your money away because I feel
Absolutely.
like a lot of people they struggle trying to pay their life insurance and then it lapses or they get to the end of the policy, the 30-year term is up and they can't get a new policy. But
Right.
you're saying that you'll be able to get all of that money that you've invested in yourself to make sure that your family is together. You get all of that back.
Absolutely. You get all of it back. And what you want to do with it is what you want to do with it. And this is a new product. This product that just came out in January before COVID-19. And that would I bring up COVID-19. COVID-19 has definitely changed how life insurance is looked at, and the underwriting is very strict, as you all may know. Um, even if you went, I haven't had a client that's went to go get her corn checked on, and she was trying to get life insurance, and they were asking questions about that. So right now, I want to say it's hard, but the underwriting is very strict. And a lot of companies, I'm not gonna put any names out there. If you pass away due to COVID-19, they put out a clause that they're not gonna pay out,
Wow.
which is very serious because a lot of people are passing away nowadays and they thinking they'll get paid out and they're not. A lot of companies are closing doors and saying no, they're not paying out.
Wow. Well, it's good to know that Country Financial is there and people can actually get the help that they need. They can sit down and chart their life plan and get their life number together so that they know that their families are covered. So I really appreciate you even putting that out there and letting us know about those products that are there. And I'm hoping that people can reach out to you. But if they need to
Yeah,
reach out
yeah.
to you,
And
how can they?
yeah, they can reach out to me at 773-619-0649. Again, my number 773-619-0649. And I also want to let you all know that life insurance is very inexpensive. I have on average my policy about $100 a month. And if you think about it, you spend that at the bar, sometimes at a outdoor activity or amusement park doing a month or entertainment doing a month. So if you look at it that way, it's really not expensive. It's just unfortunate. A lot of
Mhm.
people say, oh, 100, $150 a month is too inexpensive. But yet you got a brand new BMW out in the parking lot and you're paying maybe $400 or $500 for that. But if you will put that money aside for you won't put that money aside for your family just in case something happened to you that they're taking care of. And that's just the
Wow.
mindset we have to get out of.
Right. We all have to look at how we were doing things and where we want to go in the future and prioritize and discipline ourselves so that we are looking out for our family. We don't want to
Yeah,
leave them and leave them with nothing. So you do make some very valid points. So is
yeah.
there anything else that we really don't understand or know about life insurance that you can help us open our eyes?
Um, Only thing I want to stress is that life insurance is affordable. A lot of people think it's not affordable. If you can only afford $10 a month, 15, 20, we have those products available. don't ever think life insurance is too expensive. You always have options. We can always adjust. And honestly, everybody kind of has the same kind of rates. Life insurance, their rates aren't different depending on different companies. I don't care who you talk to. If it's not me or State Farm, whatever the case may be, life insurance is affordable to you. I think that life insurance is the answer to generational wealth, to poverty, uplifting the next community and the generation. It's impactful. I mean, think of it. If you pass away, and if say for instance your grandparents pass away, and they leave you $500,000, that's going to be a lifestyle changer for you. Honestly, even if you blow half of it in the club, that remaining 2,500, 20 to 50,000, you can invest it. You can start your own business. You can go to school. You can do a lot of things, and that trickles down to generations. The majority have been doing this for years. Just on minorities, we just haven't caught on yet.
Right.
That's all. But I want to say.
All right. Well, Kirk, we appreciate you taking time to talk and look forward to hearing more from you on the other different products and services that you have to offer. And again, if you need to reach out to Kirk Gregory, you can reach him at
773-619-0649.
then
Again,
you
I
hit
said
me up. Oh, go ahead.
619-0649. I'm pretty sure it was writing it down, so I just said it again. That's all.
You can hit me up on my page. You can visit my website, get an application started, reach me back at 630-299-6487. All right. We will talk
All
to you
right.
guys
Talk to you
soon.
soon. All right.